Well, today is Tuesday, April the 14th, and you would think by the market that there was no problems out there, but the banks did send a warning signal. We're going to look at the banks charts in a second. Citibank reports tomorrow. Whole lot of earnings coming up for the next 2 weeks, and that will say a lot about what the market thinks is going to happen in the second quarter, which is very important. I mean, already the banks are given negative signs about the second quarter and the economy. Doesn't look like the lift, although Trump may be talking about it, but it's not going to happen by May the 1st. Some states have already admitted that it won't. It'll be more towards the end of May, like California and New York, but that'll be determined. But there's still lots in the wind that could cause this market to continue its erratic behavior. Volume was low. The Dow made its high at 10:30 a.m., which is typical, and then just channeled right after that. Always this initial surge of interest. When the market opens up high, there's a surge of buying, money pours in, and then the scalpers come in and take their first 1 hour of profit. Same thing happened with the NASDAQ, but it's just continued to move a little bit higher towards the end of the day. Apple, Amazon, spectacular days. S&P 500 looks a little bit like the Dow, but it ended up higher than its point at 10 o'clock. But the advancers and decliners were 3-1, which pushes our oscillator up a little bit, not to the previous high, but now we've had 1, 2, down, up. So 3 up days, 1 down day, 1 up day. Let's keep an eye on that. And let's look at some other things like our summation index, which continues to creep higher. It's now at 708, negative 708. It was not long ago, it was 4 times that value. So it's done a lot of scraping back, and it's our long-term indicator. Obviously, the long-term indication is positive. JP Morgan says that people's bank statements, investment portfolios should be made whole by the first quarter of next year. The volume, a little bit higher volume in the buying today and less volume in the selling. The stacked volume shows that we had a little bit higher volume than yesterday, but still from a volume point of view, it's as low as we've seen since March the 30th. So it's 2 weeks ago since we've seen anything higher than this volume. Did I say that right? Anyhow, let's go to the charts. SPX up 3%, continues to move in the direction of the Gartley pattern. First stop 31.50. Over the 50, and it's cruising into an area of low resistance in the cloud. So depending on earnings, we should be hitting this cloud. Well, we will be hitting this cloud next week. There's no doubt about that. But depending on earnings, it's how high we're going to hit the cloud or how low we're going to hit the cloud. And the Chiku span, which we haven't talked about now in a couple of weeks, but it's because it's sort of been out of the picture, is in a point now where it has to close tomorrow above 28.65, or we risk falling below the candles and having a bit of a more difficult resistance going forward. The VIX did drop 8%, resting right on the cloud. Apple, massive day, up $14. And not only did it surpass its first Gartley goal of 278.30, but it poked itself right into the cloud. And the Chiku span is right there within this candle. So when it comes out tomorrow, it's going to be above these set of candles, which are going to provide short-term support. But then when we go into earnings on April the 30th, we've got this cavity here where the Chiku span has no support, and the cloud is flat. So if Apple comes in with decent earnings, and they're not likely to be stellar, but has a negative projection for the second quarter or their third quarter, then we're going to see Apple pulling back a little bit. Nobody's in a big rush to kill this stock. They know that the stock has a long-term future of making new highs above 327.85, but there's still a lot of short calls out there on Apple, is my understanding. We did finish above 61.8%. So a lot of things were broken today all at once. We did create a gap right here, so we're going to draw that gap in there and keep an eye on that as we go forward. So that's a pretty significant gap. They are going to introduce a new iPhone this week. That's the word. They also reported that their sales in China were much better, have been much better than in the previous. So that'll be confirmed when they have their earnings report on the 30th. The other big stock that we don't normally look at, but it's Amazon, and it was up $116 today. I mean, Amazon is the only stock out there, to my knowledge, only significant stock that's made a new high. Its previous high was registered back here on February in 2020, and now yesterday, it stopped at that level, and it just blew past it today. So firing on all cylinders. If somebody has good earnings this quarter, it's going to be Amazon. And if somebody has a good outlook for the next quarter, it's going to be Amazon. Caterpillar regained a little bit, but it was blocked by the 8 moving average. Its SMI short term is still going down, long term is still going up. It goes ex-dividend for $1.03 on Friday morning, so expect the stock to drop by 75 to 90 cents because of that on Friday. I'm still short the August 120 call, so I'm not in any rush to see Caterpillar break out until well into next quarter. Disney up 2.6%. Home Depot. I sold some Home Depot today, 100 shares, and I tweeted it when we hit resistance level 3 right here. So when we hit resistance level 3, I actually thought that Home Depot was going to come down and make a move towards the cloud, but it didn't. But it did finish the day where I sold the stock, so a little pullback tomorrow would let me buy the stock back again. I want to keep as full a position in Home Depot as I can afford. I'm going to have 200 of my shares called on Friday because I sold them. I bought them back in the 160s with 180 and 190 short calls. So, I've made what I wanted to make. I made my plan on those. But I want to keep reinvesting. And at this point, when I do buy Home Depot, I'm not buying any short calls to go with it. I'm just buying the stock. So I do want to get back into Home Depot tomorrow. A little bit of a pullback. I have an order in at 204.50, and I put that order in when it was 207.25. So that would give me a nice $3 pullback over where I sold it. What else can we talk about? The REITs didn't do very much today. Coca-Cola up 4.5%, but still being held back by the 50. If you want to buy Coca-Cola, probably a good opportunity to do that. Its sales have got to be suffering with people not going out to restaurants, bars, 7-Eleven, and just picking up a Coke whenever they want. AT&T up 3% today. The banks, I'm going to show you the banks in a second. Whirlpool up 2.84%. Over the 38.2. It's held that. But let's look at the banks. Here was the canary in the coal mine, possibly. They're telling us that the economy is going to be tight. And all of the banks pulled back today based on the outlook that was given to us by JP Morgan. So where's JP Morgan? Right here. They had a significant pullback, 2.3%. Even though their earnings weren't bad, it was their forecast into the next quarter, which was pretty dismal. And let's just keep an eye on the banks. All of the SMIs for the banks, I hid them to get the charts a little bit bigger, but they're all showing a topping of the short-term stochastic momentum indicator, but the long-term momentum momentum indicators at the bottom. So banks are going to be a good stock to buy. They may not be able to hold their dividends, so be careful. U.S. Bank goes ex-dividend this week. No, they pay their dividend this week. They went ex-dividend a long time ago, but they kept their dividend. I don't know what J.P. Morgan said today about their dividend. Before you buy into the banks, make sure that they're still going to pay their dividend, or wait to get a better opportunity to buy in.